Here's something most traders don't think about, guys. The market isn't the same every month of the year, right? Some months are prime time for smart money trading, clean displacement, clear breaker structures for value gaps that actually hold. Some other months are just kind of choppy, right? And they're just designed to kind of drain your account or drain your mental health. And that is why understanding seasonality matters so much, right? ICT talks about this all the time. There are times to go risk on and times to sit back and protect your capital, basically. So in other words, there's time to play offense, time to play defense. Okay. So in this video, I'll break down the months with the cleanest price action for ICT SMC. The months you should trade smaller or maybe sit out or trade evals like I do. How institutions move money through the calendar, and why traders often feel great during backtesting session but actually struggle on live, especially in the summer. So by the end, you'll know exactly when to step on the gas, when to chill, or when to just kind of be neutral about it. All right. So seasonality matters because markets move in cycles. Okay, not just daily kill zones, but like kind of like a yearly rhythm. Okay, and institutions follow fiscal quarters and rebalance at very set times. Okay, and they take vacations in the summer. So when you see a year where your win rate feels kind of amazing in the spring but terrible in August, let's say like this year. Well, my August wasn't that bad this year, but this August as a PA month has been terrible. That's not you losing your edge, guys. It's the environment. Seasonality kind of explains it. Okay, so don't get discouraged. May of this year was the worst month I've seen in my whole 6+ years of trading. Usually summer is bad, but May this year was was god awful. It was actually fucking horrendous. And I know I'm not the only one that thought that, right? All right. So let's start with the good news, right? The best month for clean PA are usually January to May. The year or the start of the year is usually powerful. New yearly candle opens, quarterly opens, fresh capital flows in. March and April in particular tend to trend really, really well. That's where you'll most often see clean moves and displacement that run for weeks and weeks. A trend, something's going right, right? July, and this is mostly like this is not like actually like factual. This is just I just messed up my cam. There we go. This isn't actually like it is factual, but it's more like the way it's felt for me as well throughout my years of experience. Like because you could take everything ICT says for money, but you could also kind of use your own judgment at the same time. And this video is very based on my own judgment as well as a little bit of the teachings from ICT. So July, even though it's a summer month, July has been really good for me. Institutions kick off and tech earnings season hit. The Nasdaq especially really loved July in my own opinion, right? Now September to November is kind of after the summer chop. September kind of brings volatility usually. October sets the lows. November is one of the strongest month of the year usually because November rallies and it usually has an insane track record. And they often give the cleanest kind of like unicorn setups or like fair value gaps that retrace and actually hold an actual like legit trend. Usually Q4 is really really good. So these months are when you want to be risk on, trade your full size, hold your winners, maybe to kind of get that outside buy side liquidity or something, and expect structure to be respected a little more often, right? Now the worst months, in my opinion, again, okay, I call them the trap months. Okay, it's June, August, September ish. I know I said it before, but ish, late December. Uh, those are like really really bad to like, especially June, August, and a little September. This is like the summer doldrums, if you will. Liquidity is gone. Institutions are on vacation. The market chops around. No breakout really works out. For value gaps are getting disrespected left and right. We're just chopping. Breaker structures are actually liquidity sweeps and like whatever, whatever, whatever. September especially like it's September is a hit or miss for me really. Historically and in my own backtesting sessions and in my journal, it's either one of my best months or one of my worst months. We're currently in August, right? August, September. That's next month. Can't wait to see how this goes. Also late December, like I said, the last 2 weeks basically of the year are usually half dead. Christmas, New Year's, no volume, holiday chop. Sometimes a little like Christmas rally, but not really. Like you can't really count on it. Usually it's slow, it's grinding. It's often just like a trap if you're trying to like scalp the intraday. Usually you get your best just to wait for start of the new year, and then usually the start of the new year kind of gets better and better. So if you're risk off end of December, as you progress into the new year, you can kind of see how the action's looking and start putting more and more risk on as you kind of go. Usually I end up being full risk around end of February, early March. So around there is usually when I'm back to my full size until the summer, right? Seasonality is not random, guys. It's actually driven by how smart money operates. So the quarterly opens in January, in April, in July, in October, and it often kind of kicks off fresh moves. Institutions allocate capital, and those opens become like kind of key reference points. I know traders that use those on their charts. They have them marked out. There's also the quarter ends, which is like June and September's. They're usually weak because funds de-risk and kind of rebalance at the end of the quarter. Um, Earnings season is late January, April, July, and October. Yeah, October. And this is usually the big tech earnings like that moved the Nasdaq hard. Like yesterday, we had was it Nvidia yesterday? I think it was Nvidia yesterday that kind of came through with their earnings and moved the market like crazy. That's when you get clean liquidity sweeps at the open, displacement that actually follows through, trends, none of this choppy shit. And I'm not even talking about like a search and destroy choppy shit. I'm talking about like a search and destroy on the monthly time frame, on the weekly time frame is absolutely vile. Okay. If we talk about some economic calendar shit, CPI, NFP, FOMC, these kind of repeat every month or every quarter, and they often give the cleanest ICD style setups. They usually run stops on news, market structure shit displays in the true direction that you really want to go. I seen a lot of people not trading these days. Those are for me and my back testing session. Those are my best days. Don't trade during the news. Trade after the news, but they're usually at 8:30. FOMC is at 2, right? So usually what I do is I'll trade market open to the end. CPI and NFP have been long gone, and FOMC is into PM. If AM's not good during FOMC, I'll trade PM post FOMC. So after FOMC, right? When you hear ICT say time and price, it's not just like 9:30 or 10 a.m. intraday. It's also March, July, October under yearly cycle, right? Does that make any sense? You kind of need to align your bigger time frame with your lower time frame. Usually, I haven't had a single swing trade in a month and a half or something, and I'm guessing it's because we're in August. I was on vacation as well. But I'm guessing they're gonna come back through very, very soon. Everything's been so choppy lately. Even gold has been chopping, so that's how you should tell. That should tell you that the market is in that month where it's kind of doing this right here, which like, um, and here's where seasonality actually ties to your psychology, right? When you backtest, you only see when a candle closes. That ties back to my last video. You don't actually see the noise, which is why backtesting feels so easy. The setup looks clean because you're reviewing the good months where structure held. When you're going live, you're watching every tick in August or December, and wicks kind of look like displacement until they close as rejections, and that is why traders get faked out. Seasonality kind of explains the gap. In live markets, you're trading through the slow months. In backtesting, you're only seeing kind of the clean story being told with the candle close. So what's the solution? I would say trade live the same way you backtest, right? Only trust the close and recognize which months are worth pressing on and putting risk. What I usually do is I'll go full risk on live account, fully everything full risk, or like half risk into a full risk after the trade confirmation during the best months. During the worst months, I'll kind of trade an eval, and if I can get a payout or something, maybe I'll trade my live account on the side if I can. Um, if the setup's looking really, really good. But again, every single setup has a losing proportion. Let's say your win rate is 70%, you still have a 30% chance, or it's 30% losing trades. So why risk, your win rate with your live account when you trade an eval or something, right? Or just de-risk very, very heavily in those months. And that is how the profitable stay profitable, and how you can kind of extend your stay in these markets, right? So how do we apply it? Risk on January through May, July, October through November. Trade your A plus setups, normal size. Expect your follow through. Relieve runners, right? Risk off June and August, September, late December. Smaller size. Focus on evals, journaling, sit out. Target not intraday, but intermediate high. Don't go for the fucking hanging fruit or whatever. Think like a farmer, right? You don't plant in the middle of winter, right? You wait for the fertile season. Trading is kind of the same. You press when the market pays you, and you protect when it doesn't. The next time you're frustrated with chop in August, remember it's not you, it's the season. Trade like smart money, align with the calendar, risk on in the high probability months, and risk off when the liquidity disappears. Wix lies, buy you sell the truth. Don't forget that. That was from last video. But seasonality tells you when to play offense and when to play defense. If this gave you clarity, drop a like, subscribe, comment below. What month has been your best or your worst as a trader? And I'll catch you guys in the next one. Peace.